Waiting feels safe, but it quietly costs you growth. The early years matter more than the later years. Not because you invest more, but because you gave it more time. If you invest $500 a month starting at 25 instead of 35, the difference by age 65 can be over $500,000. That is the price of waiting 10 years to feel ready. And here is the truth. You will never feel fully ready to invest. Not at 25, not at 35, not even at 45. The biggest investing mistake is not losing money. It is not starting. You are not behind. You are early if you start today. The perfect moment is a myth. A lot of people say, I'll invest when the market feels safer. I'll invest when I understand everything. I'll invest when I have more money. But here is what actually happens. You save in a bank account earning maybe 0.5% to 2%. Inflation quietly eats 3% or more. Your money slowly loses buying power. Meanwhile, the stock market has averaged around 7 to 10% per year over long periods. Waiting feels safe, but it quietly costs you growth. The math that changes everything. Let's keep this simple. Two people. Both invest $500 per month. Both earn an average 8% per year. Person A starts at 25. Person B starts at 35. At 65, Person A ends up with about $1.5 million. Person B ends up with about $900,000, same monthly amount. Same return, same discipline. The only difference? 10 years of waiting. That is compound growth. Compound growth explained simply, compound growth means your money earns money. Then that money earns money. Then that money earns money. It is like a snowball rolling downhill. At first it looks small, then it becomes unstoppable. The early years matter more than the later years. Not because you invest more, but because you gave it more time. Time is the real superpower. But what if the market drops? This is the biggest fear, and it is valid. Markets go down. But here is what history shows. The market has dropped 10% or more many times. It has crashed, it has panicked, it has scared everyone, and over decades it has still trended upward. When you invest consistently using dollar-cost averaging, you buy some shares when prices are high, some shares when prices are low. You remove the pressure of timing. You stop guessing. You build steadily. Investing does not require a lot of money. You do not need $10,000. You do not need to know everything. You can start with $50 a week, $100 a month, whatever you can afford consistently. Many beginner-friendly brokerage accounts let you. Open with no minimum. Buy fractional shares. Automate contributions. You do not need to pick individual stocks. You can start with a simple index fund. An index fund is just a basket of many companies. Instead of betting on one company, you own a tiny piece of hundreds. Simple, diversified, low cost. If this is helping you think differently about investing, hit like so more beginners see this. And subscribe if you want simple, no-hype investing guidance every week. Now, let's talk about what you can do this week. Your 72-hour action plan. You do not need a 5-year plan today. You need a 72-hour plan. Step 1, open a brokerage account. Pick a beginner-friendly platform. Look for low fees, easy interface, automatic investing. This should take 15-20 minutes. Step 2, fund it. Transfer a small amount, even $100 is fine. The goal is not to be impressive, The goal is to begin. Step 3. Buy a broad index fund. Search for a total market or S&P 500 index fund. Buy one, just one. Keep it simple. Step 4. Automate. It's set up automatic, weekly or monthly investing. $25 a week is powerful over time. Automate it so you never debate it again. Let me say this clearly. You are not late. You are not bad with money. You are not incapable. You were just waiting to feel ready. But confidence comes after action, not before. The first investment is the hardest. After that, it becomes routine. After that, it becomes identity. After that, it becomes wealth. Waiting costs more than market drops. Compound growth rewards time, not perfection. You do not need a lot of money to begin. A simple index fund and automation are enough to start. The biggest risk is staying on the sidelines. If you know someone who keeps saying, "I'll invest when I feel ready," share this video with them. You could change their financial future with one link. And if you are that person, open the account, fund it, buy the fund, automate it, start this week. Your future self is waiting.